Strategies for trading at the beginning of the week. Face volatility with confidence. Saturday and Sunday are the financial markets' long holidays. The markets are quiet, volatility is low, but make no mistake, when Monday comes, the markets can explode like water that has just been opened from a dam. So, how can we avoid being surprised and take advantage? Check out these tips. 1. Review last week's market conditions. The financial market is like a marathon athlete who has just crossed a tough terrain. The blisters on his feet, last week's data, determine how fast he can run on the next track, Monday. If he's been falling all week, bearish, don't expect him to hit the ground running on the new start line. Why should last week's tracks be ignored? 1. The market is like an emotional time machine. Traders are humans, not robots. Friday night emotions, greed/fear, carry over to Monday morning. Concrete example. Friday closed red. Traders who failed to cut losses may panic sell at Monday open. Friday closes green. Profitable traders may be overconfident and desperately averaging up. 2. Psychological level equals traders, war zone. The highlight of the week, e.g. $100,000 Bitcoin, will be the battleground between buyers and sellers on Monday. The analogy, think of $100,000 as the finish line of a race. If Bitcoin fails to stay there on Friday, sellers will make it a target of attack on Monday. 3. The Sunday night effect in crypto. Stocks are on vacation, but crypto is 24/7. Saturday through Sunday news, like Elon Musk's tweets or regulatory issues, can be a time bomb that explodes on Monday morning. The Detective's Guide, unraveling last week's trail. Step 1. Dissect the market medical record. Weekly trend. 5 consecutive red days. Bearish momentum is strong. Price stuck at 3x resistance. That zone is the graveyard of buyers. Volume. High Friday volume plus falling price equals sign of distribution, whales selling quietly. Step 2. Identify wound points. Last week's support/resistance equals traders' GPS. Example. If Ethereum fails to break $2,000 for the week, that level becomes sacred resistance. Friday's closing candle. Big green candle, bullish signal. Red candle with a long tail, seller dominant. Step 3. Check the weekend report card. Critical news. Fed meeting Saturday. Trade war Sunday, effects only felt Monday. Social media sentiment. Trending hashtag Bitcoin crash on Twitter could trigger panic selling. Monday morning simulation. From theory to action. Case 1. Bitcoin and the gap down trap. Last week, BTC fell from $105,000 to $100,000 due to Fed issues. Monday morning, opened at $29,000, 3% gap down. Strategy. Don't rush to short. Wait for reaction at $100,000. Former support is now resistance. If the price rebounds to $100,000 but is rejected, bearish confirmation, can short. Case 2. Ethereum and fake breakout. Last week, ETH consolidated at $1,800 with low volume. Monday morning, gap up to $1,850 on network upgrade news. Strategy. Don't FOMO. Check first 1-hour volume. If volume is high plus price holds at $1,850, buy. Target $1,900. Secret weapon on Monday morning. 3 anti-failure tips. 1. Gap is trap. 70% of Monday morning price gaps are filled in the first 2 hours. Example. If the price opens a gap down, wait to see if it can fill the gap with a rebound. 2. First hour equals key. High volume in the first 60 minutes? That's the sound of smart money. Pro tip. Use the 15-minute time frame for early trend detection. 3. Zero mentality. Forget last week's profit/loss. Start Monday with your mind as clean as a new spreadsheet. Mandatory checklist before trading. Compare open price versus last week's high/low. Check the economic calendar. Any important data today? Scan for crucial weekend news. Use platforms like CoinDesk/TradingView. Decide on 2 scenarios. Plan A, follow the trend, and Plan B, in case of reversal. Markets are never new, but they always provide new opportunities. Last week's scars are a map, not a prison. With this strategy, Monday is no longer a scary day, but a playing field filled with profit clues. 2. Pre-market. Secret leaks before the market opens. Pre-market prices are like the warm-up of the fighters before the dress rehearsal begins. Think of it like a behind-the-scenes sneak peek. Few people see it, but it can give big clues. Why is pre-market important? 1. Reflects the lust of traders in the morning. Pre-market is the testing ground for big players, whales/institutions, to test sentiment. Example, if Bitcoin pre-market rises 2%, there could be a silent accumulation by whales. But be careful, low volume price is easily manipulated like a banana tree, looks strong, but easy to knock down. 2. Early warning system. Pre-market price changes are often an early alarm for two scenarios. Monday bloodbath. Pre-market red 5%, mentally prepare for a sell-off at the opening. Monday miracle. Green pre-market 3% plus rising volume, potential rally. 3. Traces of the invisible hand. Large orders in the pre-market often leave a trail. Example, Ethereum pre-market suddenly jumped to $1,850, but when the market opened, the price immediately plunged. What does this mean? Whales may be deliberately trapping retail traders. How to read the pre-market without getting tricked. Step 1. Volume equals life. High pre-market volume, above 30% of daily average, more valid signal. Low volume, price could be a big lie. Step 2. Compare with key levels. If Bitcoin pre-market has broken last week's resistance, $100,000, this could be a genuine breakout signal. But if the pre-market price only touched $100,000 and then dropped again, that's a false breakout. Step 3. Check news sentiment. Green pre-market plus positive news, e.g. Bitcoin ETF approved, real rally opportunity. Red pre-market plus no clear news could be a mere technical correction. Pre-market scandals. Examples of stories that discourage traders. Case 1. Pre-market pump and dump. Action. Shitcoin X pre-market rises 50% due to false rumors on Telegram. When the market opens, price immediately crashes 70%. Whales have taken profits. Retail is victimized. Lesson. Pre-market without volume and valid news equals hell trap. Case 2. Pre-market red herring. Action. Ethereum pre-market red 4%. Traders panic short. When the market opens, price rebounded 5% on news of a network upgrade that hadn't been shared yet. Lesson. Don't trust pre-market colors. Fail-proof strategy. From pre-market to profit. 1. Wait 30 minutes after opening. 70% of fake pre-market moves are revealed in the first 30 minutes. Example. If the pre-market is green, but the price immediately drops when the market opens, that's a sell signal. 2. Join the countercurrent. Extreme pre-market, up/down greater than 5%, is often a reversal signal. The logic, if everyone is FOMO buying in the pre-market, who is left to push the price up again? 3. Use limit orders, not market orders. Avoid mispricing when pre-market spreads widen. Example, Bitcoin's pre-market price is $100,000, but when it opens it turns out to be $99,000. If you use a market order, you will get slippage. Pre-market is a shadow, not reality. Trade when the sun is shining on the market. Mandatory tools. TradingView, check pre-market volume. Real-time news platforms, Cointelegraph, Bloomberg. Price notification bot, to monitor sudden movements. By mastering the art of pre-market reading, you can become a market detective who steals the start before your competitors realize. 3 markets open equals gladiatorial arena. Do not enter before the storm subsides. Imagine the newly opened market as a gladiatorial arena. Swords, volatility, are flying, blood, liquidity, is still thick, and enemies, false signals, are lurking everywhere. Entering too soon equals financial suicide. Why is the first 1 to 2 hours hell? 1. Buyer versus seller civil war. First minute. Emotional traders, who hold weekend positions, panic sell/buy, prices move wildly. Example, Bitcoin opens at $100,000, then within 5 minutes plunges to $98,000 due to panic selling. 2. Stop-loss hunting trap. Whales deliberately push the price to the level where many stop-loss retail traders gather, mass liquidation, price rebounds suddenly. The analogy, whales gang up on small fish, retail, trapped in the shallow zone. 3. Liquidity is still thin. The order book is not full, the spread buy-sell price difference. Widens high slippage risk. Example, wanted to buy Ethereum at $1,800, but due to low liquidity, execution was at $1,820. Strategies to survive the deadly first 5 minutes. 1. Be the watcher on the hill. Wait 1 to 2 hours. Let the civil war in the early minutes finish. Mandatory parameters. Price has formed a higher high and higher low, uptrend, or lower high and lower low, downtrend. Volume starts to stabilize, not drastically increasing/decreasing. 2. Look for an escape pattern from the chaos. Fake breakouts/breakdowns often occur in the first 30 minutes. Confirm with high volume when the price breaks the key level. 1-hour candle closure above/below resistance/support. 3. Use technical alarms to avoid traps. Magic indicator. VWAP, volume weighted average price. If price is above VWAP, uptrend is valid. Fibonacci retracement. Monitor whether the retracement stops at 50% or 61.8%. Case example, from chaos to profit. Case 1, Bitcoin and false breakdown. Opening, BTC immediately fell 3% to $97,000 in 10 minutes. Rash action. Panic traders short at $97,000. After 1 hour, price rebounds to $99,500 as whales take profits, shorters are trapped. Wise strategy. Wait for the price to consolidate at $99,000 for 2 hours and then enter long. Case 2, Ethereum Classic, ETC, pump and dump. First minute, ETC jumped 20% due to false rumors. 30 minutes later, price crashes 30%, only early birds profit. Lesson, low first minute volume, unsustainable surge. Secret weapon to survive early session. Tortoise mentality. Be slow but steady. Don't get FOMO watching the price go up. Take note of support/resistance levels while drinking coffee. Mandatory tools. Economic calendar. Make sure there is no big news in the first 2 hours. Order book heat map. See where large order clusters gather, danger zones. 15-minute time frame. Detect early patterns without getting hooked by noise. The newly open market is a sea full of sharks. Swim on the shore until the water calms down, then hit the big waves. Anti-failure checklist. Volume has stabilized, not increasing/decreasing greater than 50% per 15 minutes. Price forms at least 2 higher highs for uptrend. There is no bombastic news in the next 2 hours. With this strategy, you will not only survive the morning volatility, but also become a patient profit hunter. For market confusion mode, be a patient hunter, not a panic goat. An indecisive market is like a wild horse that has not been tamed, leaping left, right, but with no clear direction. If you ride it recklessly, you could be thrown off a cliff. The danger of blind greed in an uncertain market. 1. Market equals mirror of traders' emotions. When prices go up and down, it's a sign that traders are in a tug of war between fear of loss, FOMO, and fear of loss, FUD. Concrete example. Bitcoin moves like a yo-yo in the range of $99,000 to $100,000 in 15 minutes. Traders who open 3 positions at once, buy, sell, buy again, can get double loss. 2. Risk of double wound asterisk. Opening multiple positions during chaos equals inviting margin calls. The analogy, like setting 5 mousetraps at once, but getting caught yourself. 3. False signal equals whales staple food. Whales deliberately make the price jump Palatine to trap retail traders to enter before they reverse direction. Ninja-style anti-greedy strategy. 1. Limit positions like setting a snack budget. Maximum 1 to 2 position rule at the beginning of the session. Example, if Ethereum is consolidating, choose one strategy, buy at support or sell at resistance, not both. 2. Wait for applause before entering. The market needs confirmation. Candle closing above resistance equals buy signal. Price stays below support for 30 minutes equals sell signal. Illustration, it's like waiting for a green light at an intersection, not running a yellow light. 3. Use the indecision detector indicator. ADX, average directional index. If the ADX value is below 25, the market is sideways, stay away. Bollinger Bands. If the bands narrow like a crocodile's mouth, a breakout is imminent. Case example, from chaos to quan. Case 1, live broadcast of dancing market. Action, Bitcoin moved between $99.8 thousand to $100.2 thousand for 1 hour. Greedy trader, opened 4 positions, 2 buy, 2 sell. Eventually hit all stop losses. Wise trader, wait for the price to close above $30.2 thousand, breakout, then enter long with 1 position. Case 2. Finally, a pattern is formed. Action, Ethereum formed a symmetrical triangle pattern for 2 hours after chaos. Strategy, entry when the price broke the trend line with high volume, 5% profit. Conclusion, discipline equals the ultimate shield on the trading battlefield. Monday morning is not a revenge or a show of bravado. It's a test of patience and intelligence. 3 powerful weapons to conquer Monday. 1. Analysis equals treasure map. Don't trade just because of feeling or looking at profit neighbors. Example, use RSI plus volume data for confirmation, not just Twitter rumors. 2. Patience equals the secret move of the masters. The market will not run, but capital can disappear in 5 minutes. Technique, set a 10-minute timer every time you want to enter. Is the signal still valid? 3. Risk management equals life preserver. Stop loss is mandatory. Example, maximum 2% risk per trade. Don't attack with all hands. Leave 70% of capital for backup plan. Disciplined traders are like bamboo trees, flexible during storms, but firmly rooted in the soil of the plan. Checklist, white heavy checkmark. Analysis, white heavy checkmark. Patience, white heavy checkmark. Stop loss. With this strategy, your Monday is no longer haunted by fear, but filled with neatly organized smiles. Thank you for trusting us as your learning partner. May the profits continue to whack. Okay, before we end, don't forget our golden rules. 5 important rules of Mr. So Crypto. First, don't use hot money. Use extra or idle money. Do not use money for daily needs or money that will be used in the near future. Second, don't over-leverage. Risk what you can afford to lose if you trade derivatives, futures. Always use a stop loss because the crypto market is very volatile. Third, 70 Bitcoin 30 altcoin. Always allocate more in Bitcoin because Bitcoin is the parent of crypto. By allocating more in Bitcoin, your portfolio will be safer when the market does not meet expectations. Fourth, always stay cash. Always stay in cash 10 to 20 to buy when the market discounts or drops significantly. Then you can sell when the price has risen, so that you still have cash for the next discount. Fifth, think long-term. Investing is not about 1 or 2 days to get rich. So think long-term and minimize the risks that might make your money disappear. Everything takes time. Remember, Warren Buffett didn't build his fortune overnight. If you find this video useful, help us to continue to make videos like this by clicking subscribe and share with your family and friends. Don't forget to let us know in the comments column if there is anything you have questions about, because your comments mean a lot to build this channel. See you soon, and don't forget, HODL knowledge and mindset first, then HODL assets.